Do I need long-term care insurance or not? Is one of the financial questions that sits on every adult's mind. If you had a parent or sibling that was in a nursing home for 3 to 10 years or more, that question isn't just on your mind, but it haunts you. Is having long-term care a good financial move? Greetings again. My name is Pat Zumbush, and I'm a certified financial planner who is dedicated to making sure that people do the smartest things possible with their money. If you don't know what long-term care insurance is or whether you need it, then this video is for you. As a description, keep in mind that long-term care insurance is not medical insurance. Everyone needs medical insurance, but not everyone has, or in my opinion, needs long-term care insurance. Generally speaking, long-term care insurance addresses the 6 to 7 definitions of simply taking care of yourself each day, like getting out of bed in the morning, going to the bathroom, getting dressed by yourself, bathing, incontinence, and being able to feed yourself. The long-term care industry refers to these 6 functions as ADLs, or activities of daily living. Though it varies by insurance policy, if you have proof that you can't do 2 out of 6, then you qualify as having triggered the policy. The reason long-term care insurance is sold is to address the cost of needing help, which ranges from requiring in-home care at say $1,000 per week or $4,000 per month, to assisted living facilities at $4,000 to $6,000 per month, to nursing homes at $7,000 to $10,000 per month. Though those numbers are scary, the essential financial and emotional problem is the variability of need versus the cost to protect against that need, that exposure. These protection costs are the premiums paid on the long-term care policies. Because the whole subject can also be emotional, let me try to put just a few helpful facts on the table. Number 1, premiums vary all over the place, but the younger you start, the cheaper the policy premiums because you are further away from making the claim. Still, the long-term care policies will be $1,000 to $4,000 per year for a man and $2,500 to $7,500 per year for a 60 to 65-year-old couple. It's an underappreciated fact that the man's policy is cheaper, not only because they die sooner, but because the woman is the primary caregiver for him, and insurance companies know this reality. Thus, it's almost always cheaper to buy a joint policy. Number 2, almost all long-term care policies now have a lifetime cap on the payouts. Generally, that cap is listed as a dollar amount, say $200,000, or a time period, say 5 years. Also, unless you pay more for an inflation rider, long-term care coverage does not keep up with higher future medical costs. Number 3, the real rub is that 70% of all people might use long-term care facilities, a fear-mongering statistic often proclaimed by long-term care sellers, but they don't tell you that 30 to 50% of those users include hospice care or stay in such facilities for less than, say, a year in duration. But there is the long-tail distribution problem, which is that the average duration of use by males is 2.3 years and just shy of 3 years for women. Speaking purely mathematically, it's that 3 years at $8,000 per month or $280,000 that scares people. Number 4, do keep in mind that medical insurance can no longer discriminate, but long-term care providers can discriminate down to a fine hair. If your health is bad or your family history is bad, you will not get insured, and the reality is that we get harder to insure the older we get. Thus, make the decision prior to turning age 65, but probably not before age 55. Number 5, be aware that long-term care premiums keep going up. Once you are insured, they can't drop your coverage, but they can and do increase your rates. In summary, it's a cost-benefit problem in addition to a psychological can't sleep at night problem. If you paid $7,000 per year for 15 years, you'd have about $105,000 into the policy, which at 4.9% return per year is worth about $150,000. Thus, you know that you have put $150,000 out in premiums, but you don't know if you'll ever be able to use it. To be perfectly clear, there is no perfectly clear answer. However, rather than leave you in the lurch, let me give you some helpful guidelines I'd recommend, and they're all wealth related. If you have investments of less than $1 million, not including your home, don't get long-term care insurance. It simply costs too much related to how big a drawdown impact it has on your resources. If you run out of money, Medicaid will kick in to cover long-term care needs. If you have $1 million to $2 million in investments, you can consider coverage. If you have $2 million or more in assets, then don't buy long-term care coverage and instead self-insure. The whole long-term care story is a difficult one, but now you have some definitions and perspectives that might lessen your anxiety as you navigate these waters. As always, thank you for letting me help you do wise things with your money.